Hey, it's Brett from Moonstream. Want to give you guys an update on the crypto and Bitcoin markets. Mostly we'll be talking about Bitcoin and looking at total market cap, as well as some other studies that you might find interesting, as well as are we at a top, are we near a top? And the answer is I don't think we are close yet. So let's jump over into the charts. All right, so taking a look at Bitcoin here, we have two bull flags still projecting a measured move to around 150,000. That's what I'm seeing. And the longer term time frame bull flag all the way back since September 24, the bull flagpole up to this level there, measured move on that. A bit long for a bull flag, usually that far down it sort of invalidates, but it's interesting that the measured move from that flagpole to the breakout puts it right around 150K, and similarly this recent bull flag, which does qualify that push up, and this being the flag, the measured move from the flagpole here puts it right at 150. So, you know, the studies that I've been doing for the last 2 years marking 150,000, getting ahead of myself. We are still on target, and it's still possible for 200K, and I'm thinking of adjusting my target on the upside a little higher, around $246,000. And I did a study and a case study on that recently, and the videos here, so you can go look for that. Or find me on TradingView. You can always Google Brett Fogel TradingView, and I do studies over there also. So with Bitcoin here, I think we pull back into this range. We're consolidating. These are our buy block indicators where we visualize where the buyers are. This is a concentration of limit buy orders on the exchange. In this case, this is the overall index and an aggregate of the different exchanges. So this is often held price, and more than often, very frequently, prices bounce right out of these buy zones from the midpoint. We saw it right here, and we saw it right here, and these were excellent buy signals. So this, I think, is going to hold. Originally, I thought we'd come down to the $114,000 level for two reasons. There is a CME gap right in that range. And often over the years, I've noticed that these big, large candles, whether you want to call them vector candles or fair value gaps that by the market makers, very often these get retested right at that midpoint. And we saw that a couple times recently, all the way back here, the midpoint of this candle right there. Price came down and touched on it. So it doesn't happen all the time, but very often it does, especially when there's a CME gap. At any rate, I don't think we're going to get there anytime soon. I think we're going to pull back down here a bit into this 117,000 range. I have limit buy orders of my own in the 117, or actually right at 117K. So another dip, and then it's time to go farther higher. If we want to look at this in a slightly different chart here, let's see, I've got a couple of these. If I scroll down onto this one, we pretty much covered it, but this is what I've been watching on this chart here. So if we just visualize it, we have lower highs going through there. We have a ceiling up here at 120K. And so the breakout, to have that momentum to do that breakout, it oftentimes needs to pull back, get support from a trend line or the 21-day moving average. And of course, we have this long-term trend line here going back down in since April, and that's kind of setting up this fifth angle on the charts. So we'll get to some other targets there, and then we'll get back and look at total market cap in a minute. Here's the Bitcoin M2 global money supply. I've adjusted this a few times now. Typically, this is a 10 to 12 week lag. Bitcoin lags the global money supply, so the offset that I was using over here was around that 70 days, and this was lining up very well. And then it's shifted to the 84 days, 10 weeks, 7 days a week, 70, 12 weeks, do the math, 84 days. But now, since we started deviating right in this area with the missiles flying over the Middle East, so I'm now using a 90-day offset, and that seems to be lining up pretty well. And that indicates, you know, we should kind of see these spurts and pullbacks here, and probably in a more smooth manner, but still more upside, more money coming into this market as we go along. Now, here's somebody's been passing around. People have been passing around this chart of, is Bitcoin, has it topped? You know, is this the time to get out? We saw that trader who was holding a lot of Bitcoin since back in 2011, essentially selling $9 billion of Bitcoin back in here. And so this is a monthly chart, but has created some turmoil. And the fact is, they were not looking at the right chart. This is not a logarithmic chart. So if we draw from this level to these peaks, you know, this could be a market top, but we've now, on this monthly candle, we're well above that. First thing I said when I saw it is this is wrong. It's not a log chart. And anytime you're doing multi-year analysis, you should be on a log chart. So with that in mind, this trend line here is invalid. It's not, we want to be looking at potentially this one. Now, the reality is that would put us pretty high, 340,000. I don't think we're going to see that. And I would probably draw this a little differently. And in the end, I think it's going to be more of like a regression type of a move, a regression channel, which we've all seen the rainbow regression channel. But if we were to look at this a little differently, I have some other targets on here. 200,000 is the study that I've been doing for many years now and keep talking about. You guys have probably seen that. The path to 150K to 200K still in play. I have a new study out where I think we may have forecasted the actual high around 246,000, and then from there, the next bear market low, which would be, I'm not going to give that away. Go look at that study. This 347, I think that's off the table. 200K, 246, 50, 246 is a pretty specific number. And if you haven't seen that study, go check it out. I'm not going to go through it again here today, and we'll see. But from here, that would put us up around another 100% gain. Certainly could happen if we get that banana zone that everybody's been waiting for from current prices. A double from here, we see it every cycle, and everyone's not in agreement there because of the nature has changed, and retail is not really driving the markets as much as the institutions are, rather. But it still could happen, certainly. So 247, not necessarily by the end of the year. Maybe that's first quarter. I think we could extend this rally out into the first quarter a little bit. Let's just take a look at this, examine our base case as well. So last cycle, we saw this Fibonacci from the 2017 high down to low, extended that out, perfectly called the market top, and at the 3.618. So if we do that same study here on the last cycle here from the top down to the bottom, and again, that 3.618 is pushing us right at that 200K. So the 1.618 Fibonacci right at 100K, we hit that and pulled back and broke above it. You flipped as support, which is what we see now. I'll move the blue line out of the way. We are still riding this upward angle, this fourth and final blow-off top angle that is likely to happen. The next target, 2.618 on the Fibonacci, goes to 150K. And if I put the blue lines on these, this is the exact fractal from the last cycle there, just maneuvered a bit because it's a log chart and massaged to fit a little bit better, but this putting us in this range of pushing up to 150K, and then a bit of a pullback. I think we'll probably throw over, maybe have some shorts liquidated, short squeeze, and that'll be a good time to take profits, and then wait for that pullback into, say, late August, and then see that final drive up to 200,000, at which point probably, remember how much trouble we had at 100K. 200K is going to be problematic. We're going to reject probably, but this then becomes interesting, and getting a bounce off of there to a push up to 246 certainly could happen. We've already talked about the 11 reasons why that could happen. You can screenshot this if you want. I'm not going to go through it again. We've done that numerous times here. And you can also Google me on TradingView, like I said, at Brett Fogel TradingView, where I do updates on this already. So let's not get into it today. Here are the USDT dominance. We've been following this too. This is a warning sign that we are back down on this trend line that has called all of the market tops since 2018. This is inversely related to Bitcoin. We can see that yellow median line when U.S. tether dominance and stablecoins, when they are peaking, markets are crashing. And when the stablecoins money flows out of stablecoins like Tether, it's going into Bitcoin and the crypto total market cap. So these blue lines, the exact pattern back in here. Each time when it bottomed, this was that high before going into the summer of June, July. And then money flowed back into stables. We had that July crash of the cycle. And then we saw that second pump into the total market cap in Bitcoin right in here in November, where that top came in. So once that happened, money dumped out of crypto and out of Bitcoin into stable coins. So that's why I'm watching this study. Now, is it a double bounce? Is it going to do this, or are we going to get a third bounce potentially? That would line up better with the 150 to 200K targets. We don't know yet, but any push up from here on Tether dominance is going to mean lower prices in the near term for Bitcoin and crypto, and that may be what's happening. But we would hope that it would reject somewhere in there and then come back down for another bull market high and not get too far up into this range. Somebody was calling for a 25% pullback in the markets. I'm not seeing that, but it's not saying it can't happen. I just think that it's not reasonable with as much ETF money that's coming in to these markets and also into the ETH ETF now. But I've labeled these areas. If the USDT dominance starts pushing up here, this is crypto correction zone, and up in here is a crypto crash, and then this is that bear market when we get up higher like that. Okay, moving pretty fast here, you guys. That's about it, I guess. In terms of looking through the different coins, we can look at ETH here. ETH, I had my profit target here at 3,600, and see there was a big sell block there. It looks like it's holding fairly well from here. ETH could gather strength, push up to 4,800. Will it get past 5,000 and into price discovery zone? Some people are calling for 10,000 ETH. I don't know. We'll see. It's got to clear this range first. The measured move on the cup and handle breakout puts us right around in that 4,800 range. And so that's where I would expect to go and then reevaluate and buy pullbacks from there, ostensibly. Solana has been pushing down, had some legal issues there with pump.fun, and they're having a hard time shaking that moniker of being a participant and proponent, which they were, of pushing all of these degenerate meme coins, and which a lot of people lost money from. However, it is it pushed up, it's pulled back to support, very important support level on Solana, long-term support. And if I go to a weekly just to clean this up a bit, all the way back from prior cycles here, it was resistance at this area, and then here, resistance all the way into here where it flipped as support. And then since then, in 185, it's been a resistance zone. We're back above it. What we'd want to see is Solana holding above this level and bouncing off of it, because that would be a huge flip. And then I think it would be headed up to around 280 on Solana, and hopefully get past that and go off to new highs in this price discovery zone. All right, I'm going to look at total market cap. Won't get into the altcoins. Not a whole lot going on there. I showed, we pulled up ETH already. In terms of total market cap, there's some interesting clues. So a total market cap is in price discovery. This is the Bitcoin. If we go to total 2, we see a different story. Pushed up to this resistance area, selling off, but even when it pushes above that, it's got a lot of sell pressure up in here. This is ETH. These are altcoins. So I'm going to put an alert here just to alert myself when we get back above sort of 1.55 trillion, and for signs of strength, but also taking profits, up in this range. That's a broad market sell-off likely when we get there. Similarly, total 3, which is all the coins except for most of the coins except for ETH and Bitcoin. I think it's like top 100 altcoins. But at any rate, same kind of thing. We're looking for a bounce to push up through there and break that 1.1 trillion, 1.11 trillion level, and then a likely retest, and then that's alt season. Then we get into alt season. I just, timing-wise, don't really judge it, but that puts us in about September, October. Seems about right. Seems about right. DeFi not looking so good, though. Also rejected there, needs to pull back, and that's going to be your Aves and other things like Lido Finance, etc., and other DeFi projects. So, but at that point, again, a push through, pull back, and then push up to this new highs. Lots of seller pressure up in there. If you'd like to know where to get these indicators, these have been phenomenal for us. You go to cryptomastery.org. You get our full pro suite. The best signals I've ever used. They're way better than what everyone else uses. Everyone else using them, you have no edge. So if you're using RSIs, stochastics, MACDs, they're not going to be nearly as good as these. We fine-tuned them for crypto. We definitely have an edge, and even just knowing where the buyers are lined up, you can see this is where price reversed and price is pumped, as well as rejected in the red area. Other than that, we've got some amazing other signals that you won't find anywhere else. So that's cryptomastery.org, and you can go and look at that. I will pull it up because, especially right now in these markets, these are the times you want to have an edge. You need to have an edge. So if you go to this website, this is us, there's me. I do a video training here. You can see these. And actually, the lifetime offer is no longer offered, so don't worry about that. Then there's a monthly, there's an annual. But these are the best signals you're going to use. I know there's other ones out there. You can still use them with this. But our early reversal indicator is an accidental discovery that captures programmatic buying and selling. And when used with our RSI Pro, these are bearish divergences, bullish divergences, and our trend strength indicator. When these align, markets move. And you can see a case study here showing that, and a few others that we've created. Bollinger Bands, if you're using Bollinger Bands off the shelf, they're not going to work. There's a setting is wrong. You have to change one of the settings, which we've done in our Bollinger Bands, which captures prices and price ranges almost exactly, and we even trigger and show sell areas when it gets above this special Bollinger Band, and sure enough, that sold off all the way down to this trend line. We have something called the Rocket, which is a specific setup that I've invented. I didn't invent the prices moving, but I coined the term based on a specific price move where it's called rocket on the launch pad. If you envision a bottle rocket lighting a fuse and having it shoot up in the air, that's often what happens, as we can see in this case study there. The buy blocks I mentioned, the ERI, the early reversal indicator. Don't let the arrow fool you. That is the visitor version, that is the trader version. The actual indicator is an in-depth quant oscillator with the Keltner channel. Nobody wants to see that, but I noticed a specific pattern in that when in 2021, when it moves below a certain point and back up another point in 3 time periods, very high likelihood of a strong reversal, as you see right there. And in conjunction with our trend strength indicator turning green, and also that bullish divergence gives you a major edge. These are like 90% effective. So anyway, you get the whole pro suite there. You can read what people are saying. That's cryptomastery.org. Not to turn this into a commercial, guys, but you need to have these access tools like our radar, multi-time frame radar, giving you bullish or bearish in a daily, weekly, monthly, quarterly time frame. When they all align, also good time to catch those biggest moves. And of course, satisfaction guaranteed with those 30 days to check that out. Okay, everybody, that's all I have for you today. I wish you have a great week, and I'll keep you updated. Cheers.